Madam Chair, we're live.
Okay, let's see, at 5:03, I am calling to order the Finance Committee meeting for today, November 13th. If we could get a roll call, please, Director Oster.
Certainly, Madam Chair. Councillor Cassett,
Here.
Councillor Rivera,
Here.
Councillor Villarreal,
Present.
Councillor Lindell,
Here.
Chair Romero Worth.
I'm here.
Madam Chair, you have a quorum.
Okay, thank you. Let's see, are there changes to our agenda tonight from staff?
Madam Chair, no changes from staff.
Okay, can we get a motion?
For approval.
Second. Motion and a second to approve the agenda. All those in favor, aye? Anybody
Aye.
opposed? That motion passes. The consent agenda, I do believe there were 3 items, if I'm not mistaken, pulled off of consent. Can you help me with that, Director Oster?
Sure, Madam Chair, and one was resolved, so we
Okay.
just have 2 items pulled off of consent. Item E and item H were pulled off of consent.
Okay, thank you.
For approval is amended.
We have a motion and a second to approve the consent agenda as amended. All those in favor, aye? Aye. Anybody
Aye.
opposed? That motion passes as well. We have 2 presentations tonight. The first one is the audit update by Director Oster, and I'll shift the floor over to you, Director.
Thank you, Madam Chair. So we continue to move forward on the FY22 and FY23 audits. The updates tonight from CLA and CRI on FY22. I'm looking at my list here of things that we're working on for FY22. We have 5. One of them is almost resolved. I expect to get that wrapped up tomorrow. It's related to reclassifying some ARPA funds from earned to unearned revenue from FY22. Then we have some confirmations from Carr-Riggs Ingram, a couple questions from the auditor on grants receivable, something related to a prior year on 605, Fund 605, which is our health and dental benefits fund, and then a parking receivable that we were working through. So in the past, I've mentioned this is kind of an iterative process, and this really reflects that, the auditors at this stage have asked questions about these items. We are looking at them, we're communicating with them, and there's, back and forth as we resolve them. In some cases, there may be some entries which are needed, like I mentioned, the reclassification of revenue from earned to unearned for the ARPA fund. So that's normal and routine. I don't expect anything. I'm not concerned about this, and I believe we're still on track to meet the December 4th submission date for FY22. So CRI is primarily working on FY22 at this point. We are getting some support from CLA on working through the questions as they come in, but really, most of the work on 22 is being done by CRI, city staff responding to emails, a little bit of support from CLA in terms of pulling documentation to respond to those questions. CLA team, the main focus is on finishing up 23 to get to our preliminary trial balance. We're still chasing down some cash transactions. We decided this morning to set a hard deadline of this Friday, the 17th. After that point, we'll follow a different process to record any items that we didn't catch for FY23, but I'm communicating with the directors, with the departments. It's really just a handful of areas that we're still working with at this point on 23. Some areas are 100% reconciled. A lot of them are 95% reconciled. There's just a couple where we're still finding items, up until Thursday, Friday of last week. So the plan there is we'll make the final cutoff for FY23 this Friday, and then we'll rerun our cash reports on Monday, and Clifton Larson Allen will use that for their final work papers on FY23 for the cash in common account reconciliation. So that's good news. Continue to receive great support from all city government colleagues and directors. We're really grateful for that on both FY22 and FY23 And, reflecting back on, how we've gotten to where we are, I've kind of spent some time thinking about that over the weekend and today. And, I'm really, really proud of our team. We turned in FY21 on June 30th. It's 5 months later and we're about to turn in FY22. So that's really good progress. So we are making progress. We're getting this done. And so I feel really good about where we are. Madam Chair, that's my update for tonight. If there's any questions, be happy to stand for them now.
Questions from the committee? I just have, and we have Counselor Cassett online, so Counselor, you'll have to.
I'll
wait.
shout at you if I need you.
Okay, thanks, because as you know, when you're here, you can't always see what's going on online. I do just have one question. So the trial balance, you said you're going to be rerunning things on Monday after you get some of these final items tracked down by Friday. What does that mean in terms of when the trial, do you have a sense of when the trial balance gets turned over?
Madam Chair, so that's a great question. So the preliminary trial balance for FY23, we're targeting that, really as soon as possible. When we rerun these cash reports on Monday, that will be that'll be part of the Clifton Larson Allen work papers that are used by the auditors. That'll be part of the reconciliation. So we still may need to make some adjustments after this Friday, but it'll go through a different process. At this point, we're still putting things in, for example, in batches into Munis. As we move forward, it'll go through a different process and we'll be looking at things at a higher level. So as I'm not sure if we've really talked in detail about this, but as we move through the audit process, at the beginning of the process, we provide a preliminary trial balance. And then as we progress through the audit, we provide a final trial balance. And the final trial balance is what the financial statements are based on. The preliminary trial balance is, I'd say, 90+% of the way there. I mean, there may be still a few things that are out there pending. We generally would know what those are at that point. And there's a lot of communication between the finance department, the contractor, and the auditor about where things are and what's still outstanding. But the auditor can begin to work with that preliminary trial balance. And then as we progress through the audit, we get to the final trial balance. Generally speaking, that's the point at which the auditor sort of takes control of it. So anything after that point, we would give to the auditor and they would book it in their system instead of us doing it on our end. Sorry, it's a little bit confusing. It's hard to explain it in not very detailed procedural steps, because that's how I think of it in my mind. But as far as these reports that we'll rerun on Monday will be the part of the work papers that tie out to those balances on the trial balance, and that's what the auditors are testing as part of their audit procedures. So, for example, for an asset like cash, they test the balance to make sure that it's materially correct. So they might pull different transactions. They'll look at the bank reconciliation. They'll look at the bank statements. There's, a lot of different steps that they'll take, but those balances are what they'll be validating as part of their audit procedures.
Okay, and just to be clear again, because I think with all these letters we throw around, Clifton, wait, see, I did this wrong already. CRI, Carr Riggs Ingram, they are our auditors. They are the people who are doing this independent review of our books. And again, the process being highly prescribed.
Yes, Madam Chair, that is correct. Carr Riggs Ingram is our external auditor. They are performing the audit and they are required to be independent under auditing standards. So they can't be involved in decision-making about the way that we show things in the financial statements. They can't make decisions for management because their role is to be an independent evaluator to make sure that we're presenting our financial information in accordance with accounting standards. So that independence is a key differentiator between the external auditor and the consultant. The consultant doesn't have to be independent because they're helping us record transactions and do the day-to-day work.
Mhm.
But when they work on the auditor side, they have to be independent, which requires more of an arm's length type relationship.
Right, and a lot of the rules are created so that you have that arm's length and so that it's, the integrity of the process is protected. We can't be accused of manipulating something in our favor. You know, the rules are designed so that these folks are independent arbitrators of what they're looking at.
Madam Chair and members of the Finance Committee, that's absolutely correct. And there are a number of different measures in place to prevent there from being a lack of objectivity on the part of the auditor. One example is that the state audit rule requires the rotation of auditors after a period of, I believe it's currently 6 years. It changes, you know, depending on what's in the audit rule. But at this point, you can have the same auditor for up to 6 years, and then you have to rotate. And that's to preserve that objectivity, to prevent there from being, you know, kind of too much familiarity between the auditee and the auditor. And so that's just one example, but there are a number of safeguards. There's extensive independence requirements that are set both by the AICPA, which is the American Institute of Certified Public Accountants, and under government auditing standards, which is in addition to AICPA auditing standards, auditors of governments also have to follow government auditing standards. And independence is a very important part of that. And as a matter of fact, here in New Mexico, CPAs are required to complete ethics, continuing education. In our 3-year renewal cycle, we're required to have 4 hours of ethics, at least 4 hours every 3 years. And almost always they talk about independence in those ethics trainings. So, in short, independence is a big deal for the external auditor. Carr Riggs Ingram is the external auditor in our case. Clifton Larson Allen, although they serve as an external auditor for other entities, for us, right now, they are in the role of consulting, so they don't have that independence.
Right, so they're on our side. They're kind of on, they're on our team, helping us provide the information get the information ready that's necessary for Carr Riggs Ingram to do the work that they do under state law and all these regulations.
Yes, Madam Chair. I think, you know, maybe one way to talk about it would be that if we get a question from Carr Riggs Ingram about something, I can't ask them for help answering it because then they would be, you know, auditing their own work. So, you know, in the old days, around like the early 2000s, when Sarbanes-Oxley and, you know, there were a lot of scandals involving financial statements, firms would be involved in both doing consulting and audit work for the same client. There were some problems with that relating to lack of independence, and so the rules were made much more strict, and the firms can't do that anymore. You can't advise a client and audit them because you're in effect, you're auditing your own work. And you can't be objective, you know, by definition, you can't be independent when you're looking at work that was done by your firm. So, you know, if Carr Riggs Ingram, our external auditor, asks me a question about something, I can't turn around and ask them for the answer. But Clifton Larson Allen, because they're our consultant, can help me with that research and with preparing the answer.
Yeah, I think it's just really important that we understand the two different roles that these firms play in working with the city. Just one other thing I want to walk through a little bit. We have spent an awful lot of time talking about this December 15th deadline for FY23. And I think I had an aha moment, I don't know, last week, I guess, where that date was set and is set by, what do you call this document that I'm looking at where I'm going to tell everybody where to go to find it? But it's the audit rule, right? Which says that local governments, oh, I just lost the page here. Hold on. Bear with me. Okay. First of all, how do you describe the document I'm looking at?
Madam Chair and members of the committee, I believe what you're looking at is the Administrative Code, Section 2.2.2.
Yes.
This is New Mexico Administrative Code, which is promulgated by the state auditor under the authority that's granted to them to do rulemaking, which is in the State Audit Act. So the statute gives the state auditor the authority to make administrative rule, and then the state auditor works with the compilation commission, and they promulgate the administrative rule, which includes publishing it in the New Mexico Register, and there's a hearing process that, it's also under state law is the rulemaking process. So that results in the state audit rule, which is updated on an annual basis, typically in the spring. And there's a section of the audit rule that lays out deadlines for each fiscal year for each type of entity. And those deadlines can change over the years. For example, when I worked at the state auditor in 2017, we did a pretty extensive rewrite of the audit rule, and we switched around some of the deadlines. I can't remember the specifics, but I think we moved hospital districts before state
It's okay.
agencies
Yeah,
or something
it's
like
okay.
that. I mean,
Yeah.
there's different types of entities that the state
Right.
auditor has purview over. The deadlines start in mid-October and they go through mid-December.
Right.
And it's basically every 2 weeks from October 15th through December 15th. Different types of entities reports are due to the
Right. So that's the point I really want to make is, so you can go to the state auditor's website and look under the state audit report, I believe, the state auditor rule, and there's a drop-down list, and you can go to the 2023 audit rule, which is 2.2.2. And I am looking at 2.2.2.9, report due deadlines. And if I scroll down to AG, local public bodies and municipalities audits are due on December 15th. And so that is the date. That's the reason why we have the date for FY23, because that's the audit that's currently, if we didn't have all these other audits backed up, this is what we'd be doing for FY23. So these audit rules also prescribe how the auditor, Carr Riggs Ingram, reports to the state auditor if there's going to be a late audit. And that, if the public wants to see, is 2.2.2.9 A5. It's on page 13 of the rule. And it basically delineates how the state auditor, or how our auditor, Carr Riggs Ingram, tells the state auditor that we will or won't make that December 15th deadline. And that's when we know something might move. And so I just want to point out that this is how this prescribed rule is how a deadline can change.
Madam Chair, and members of the Finance Committee, that's correct. And if anyone would like to take a look at that rule, you'll see that it goes into pretty low level of detail about what steps have to be taken in which order when, different things are happening as part of the audit process. So,
Right.
But it is, publicly available on the state auditor's website, and it's also published in the New Mexico Register on the New Mexico OneSource site.
Yeah. So this, I think, is the easier way to find it than it might be hard to go to the register. I think that's pretty technical for people, but just wanted to point out where this rule lives and how this process works. And again, underline that it is very prescribed in how that process works. So we got a lot more to cover. I don't want to belabor this anymore, but I did want to point out a couple things that I had kind of learned. So, Councilwoman,
Thank you. Thank you, Madam Chair. That made me think of a question. So this audit rule and how it defines when all municipalities or government entities have to turn in the audit on December 15th. So if you don't meet that date, then are there other rules that regulate next steps if you don't meet that date?
Yes, Madam Chair and Councilwoman Villarreal, there are, and you may recall that we've been doing quarterly reports to the state auditor, and that's one of the requirements for entities that have not filed their report by the deadline that's outlined in the rule. So yes, Madam Chair and Councilor Villarreal, it does talk about next steps.
Okay. And so we're already following that next steps anyway? Are there other steps that they outline other than quarterly reporting requirements?
Madam Chair and Councilwoman Villarreal, I don't have it in front of me right now. I recall that there are some next steps for entities that do not yet have an auditor under contract on the date that their report is due. There are some things that they have to do.
that's not us.
Exactly, yes,
Okay.
Madam Chair.
I
and
just was
Councilwoman
thinking about
Villarreal,
things that would be applicable to our situation, I guess.
And if I can help, so our FY 22 audit, which Director Oster still feels confident we will get in on December 4th, that audit, we are, doing the quarterly reports because of course it's late. It
Right.
should have been turned in already because it's FY 22. We're now in FY 24, and the audit that's due December 15th is FY 23. So right now we are doing the things that we're supposed to be doing for FY 22 because it's late.
Right, I get that. I was just thinking if there was anything else in that same code or the audit rule that we would have to, that would kick in if we don't meet the December 15th date.
Madam Chair and Councilwoman Villarreal, no, not for our situation. The rule contemplates a bunch of different scenarios that don't apply to us. But for our particular situation, I think the late notification would have been required, for example, for FY 22, when the auditor determined that we were not going to meet the deadline in the rule for FY 22. The late notification was filed with the state auditor, and that triggered the quarterly reporting requirement, which we've been doing for FY 22.
Got it, thank you.
I just wanted everybody to know where this rule lives, state auditor's website, and where this process is all laid out as to what happens and where that December 15th deadline came from. Yes, Councilor Rivera.
Thank you, Madam Chair. So that triggered a question for me too as well, but after we finished the 21 audit, who set the deadline for the 22? Who made the December?
Madam Chair and Councilor Rivera, so at that point, the auditor and the audited entity in those quarterly reports communicate to the auditor when they think that it's going to be complete. One thing that does affect that is the contract term. Now, I think we talked at a previous meeting about how contracting is done. That's also prescribed in the state audit rule. All of these audit contracts for governmental entities have to be created through the state auditor's OSA Connect system. And you can only do a 1-year term. So that's an automatic deadline. When your contract is going to expire, sometimes there's an earlier date that's specified in the contract itself. But as far as when that December 4th date was identified, that was when we were preparing the September 15th quarterly report. That was when we notified the state auditor that the auditor, with agreement, from me, believed that we would submit the FY 22 audit to the state auditor no later than December 4th. And that was what we reported in the September 15th quarterly report.
So if everything goes perfect and we get our audit, 22 audit done by December 4th, the state auditor's office has 10 days to review it, is that correct?
Madam Chair and Councilor Rivera, so the state audit rule deadline relates to the submission, which is technically a draft report. Then the state auditor performs their review of that, and they provide what they call an okay to print communication, which is basically kind of like review notes. And they say, okay, we want you to change this header, we want you to, make this adjustment. And the audited entity and the auditor work together to make those adjustments, and then they submit the final report. The state auditor does another review. After that, you get what's called the release letter. And then the entity, there's a 5-day, 10-day, I'm sorry, I'll have to double check on that. There's a period of time after the release date that the report becomes public, and that can be waived by the audited entity. So Councilor Rivera, in answer to your question, the deadline in the audit rule relates to when the draft report is required to be submitted to the state auditor. The rest of those steps, there are some deadlines. So for example, there's a specific period of time prescribed in the rule from when you receive the okay to print communication to when the final report is required to be submitted. So there's a series of deadlines throughout the process to make sure that it doesn't drag out for long periods of time. But the idea, it doesn't mean that the state auditor would have to review and release our FY 22 report within 10 days. And that most likely will not happen. That would be exceptionally fast.
Then how would we or how would we have the 15th date for the 23 audit if the 22 won't be complete within that time frame, or possibly may not be?
Madam Chair and Councilor Rivera, so I think we don't have the time frame for FY 23 right now. However, I do recall when I worked there at the state auditor's office, it wasn't unusual for auditors to submit multiple fiscal years at the same time, even for review. So they don't have to have the release report from the previous year in order to start the review of the next year's report. It's unlikely, in my opinion, that they would release FY 23 before FY 22, but they could, in theory, review them concurrently. And I do remember that happening when I worked there.
And is that our plan? Is that why that December 15th date seems to be?
Madam Chair and Councilor Rivera, so I think the December 15th date is prescribed by the audit rule. So I think we,
And if I can help, I think once we turn in the FY 22 audit on December 4th, we're done. It's been submitted, and then, pretty much out of our hands. There are things the state auditor has to do. It is high season, as we've talked about. And so they have an awful lot of local governments that they're reviewing, unlike when we submitted the FY 21 audit, it wasn't high season. And so, they had not as much on their plates. But this time around, once we submit that, we're going to be at their mercy and their workload level in terms of when they are able to get done all the things that have to happen and get it released to the public. But that doesn't stop us working on the FY 23. And as we know, we are working on the FY 23 already. So it's, if that helps.
A little bit. It seems like there's a high level of confidence that we're going to be submitting both right around the same time.
Madam Chair and councilors, I'm very confident that we're going to meet the December 4th timeline for FY 22. FY 23 is less clear. I think that it is conceivable that we could finish FY 23 while FY 22 is still in review, and then the reports could be released you know, quickly. I don't think that 23 would be released before 22, but it could be close together. So, Madam Chair and Councilor Rivera, I don't think that FY 22 being in review would prevent us from submitting the draft of FY 23.
And again, I think in terms of timeline, that what we're waiting for is for our auditors to give us some indication that we're going to make December 15th, or they will say, we're going to need, to have the goalpost be at a different point. So that's why, but it's all prescribed here in the state auditor's rule. And I wanted the committee to be familiar with where these rules come from, given the interest and, frustration and our want to get all this stuff done. So I just want everybody to know where these deadlines have come from and what happens, who makes the call about,
And I'm just wondering if we're being on each other is what I've seen in the past, and I guess that
you don't mean budget, you mean audit. Yeah, sorry.
so I don't know if, we're being realistic with ourselves about that December 15th date.
Yeah.
Thank you.
And I think that's what we're going to be, hearing from our state, from not our state auditor, from our auditors, Carr, Riggs, Ingram, about that. And I just want everybody to know that, there's a process. It's laid out. If people are interested in it, it's online on the state auditor's website. Okay, if there aren't any other questions, I think we spent enough time on that. And I know I've been very excited for our next presentation, which is the quarterly financial performance report, which closes out FY 23. And we have a lot of staff work that went into getting this out to committee and to all those who are interested. Hold on, I'm trying to get back to my agenda, which is not happening because I went to the state auditor's website. Sorry. Now. All right, Director Oster, do I need to do anything else to introduce this?
Madam Chair, I'm happy to read the caption.
That'd be great. That's what I was
helpful.
looking for.
Okay.
There we go.
It's the fiscal year 2023 fourth quarter financial performance report. And I am delighted to have Alexis Latero, our Assistant Finance Director here, as well as Andy Hopkins, our Budget Officer, to present the report to you. And the report is attached in PrimeGov for your reference.
Thank you and welcome, directors. I don't, is it on? You might have to get, yeah,
There we go.
there you go.
Okay.
There's a difference.
Okay. Included in today's packet is the city's FY 23 quarterly report for the fourth and final quarter. Please feel free to email either myself or Andy Hopkins any questions you might have once you start reading. It is 16 pages long and full of a lot of detailed information. But if you have any questions, again, please feel free to email us. Please be aware that the GRT information we are presenting in section 2 of this report is on a cash basis, meaning the report reflects the gross receipts tax received in that particular month, not the month in which it was earned, as is referenced in the monthly GRT memo. So it's reported a little differently. I'm going to provide some highlights for you. Like I said, it's 16 pages of very detailed information, but these are the things I think you're particularly interested in. The overall city financial picture ended better than anticipated when the FY 23 budget was adopted in April of 22. GRT ended up approximately 12% above budget. This figure reflects an 8% increase from the FY '22 GRT number. Total overall revenues are expected to come in at 1% over the FY '23 budgeted amount. GRT, which I know everyone is interested in, revenues came in at 154.3 million, significantly higher than the 143 million reported in FY '22. Overall expenses are currently projected to end the year at 19% below budgeted levels. Federal funding from grants is anticipated to remain stable at or near FY '22 levels. Total FY '23 lodgers tax revenue collections increased by 2% or 273,000 from FY '22 levels. And Dr. Riley White was unable to be with us tonight, but he will be available at our next meeting on December 4th to review the economic forecast for FY '25. With that, Andy and I will stand for questions.
Okay, questions from the committee? Councilwoman?
Thank you, Madam Chair. Thank you for the report. And I just had some follow-up questions because I did look at all 16 pages and reviewed them. And I think mine were just clarifying to understand some of the pieces here. I was particularly interested about the CARES Act and the ARPA, or the American Rescue Plan Act funding. And it sounds like we're on track for those federal funds. There was one line that says this funding must be either expended or obligated by December 30th, 2023. So I'm assuming was referring to ARPA. And when you say obligated by December 30th, can you explain that a little bit more?
What page are you on, just so we can all follow along?
Page 3 of the memo,
Thank you.
Mm-hmm.
and it's under federal update section.
Yeah, thank you so much for that question, Madam Chair and Councilwoman Virial. Our grants manager, Cheryl James, was unable to be here tonight, but I did meet with her regarding the federal grants update, just in case you had any questions. So in regards to ARPA, the notes that Cheryl had shared with me, so we have expended $5 million of our ARPA funds. We have 2.5 million encumbered, meaning we have a purchase order and a contract in place. And then we have 7.5 million that's been assigned to projects, and that was approved by the council back in April of 2022. Those projects were approved, and that totals $7.5 million. We are starting to do monthly meetings beginning in December with departments to make sure that we're on track to obligate all of the funds by the deadline and then fully expend them by the time that is required. So we have to have POs and contracts in place by December 31st of 2024 for all of our ARPA funds. And then we have to fully expend the ARPA by December 31st of 2026.
Okay, and so the numbers in this memo were obviously for the end of June, right? So it doesn't obviously match what you were saying. I guess I was just curious if we're on track so that we don't lose any of the funding.
Certainly, Madam Chair and Councilwoman Virial, and you're absolutely right. So the numbers here in the quarterly report reflect the spending as of June 30th, and the numbers that I just gave you reflect our quarterly report to the feds from the end of September that was submitted in October. So you can see that we've encumbered and spent a little bit more over the quarter that began in July and ended at the end of September. As far as if we're on track to meet the deadlines and fully expend our ARPA funds, I believe we are. That is one of the reasons that we're starting these monthly meetings beginning in December to meet and go over our progress on spending for each of the allocated projects. And one of the things that we plan to discuss is if there's any need for reprogramming, which would be changing the project. And if there is, that will require council approval. So for example, if it seems that one of the projects that was identified in April of 2022 is not moving as fast as we needed to, or, isn't on track to meet the federal deadlines for encumbrances and then also for fully expending the funds, then we will likely be requesting reprogramming, and that would come to you for council approval in order to change the project.
Thank you. It does look like, based on your numbers, that we're on track, I think, for at least ARPA. And when they say obligated, does that mean encumbered and or assigned?
Madam Chair and Councilwoman Villarreal, so obligated means that it has to have either a PO or a contract. Sometimes we have both, but for example, if it's a purchase of goods, we may just have a purchase order and not have a contract. But that's what obligated means, is that we've identified the project that's been approved by the governing body, and then we've entered into either a purchase order or a contract with a purchase order to expend the funds. And that has to happen by December 31st of 2024. And then we have 2 more years to fully expend.
Okay. So 2023 is not a deadline. 2024 to expend all of ARPA's. And then they have like extensions, potential extensions, right?
Madam Chair and Councilwoman Villarreal, I don't think there are any extensions available at this point for the 2024 and 2026 deadlines. Let's see, so in the memo here, you saw the 2023 date?
Yeah, it says this funding must be either expended or obligated by December 30th, 2023. Is that a typo?
Mm-hmm.
On page 3?
Madam Chair, I apologize. That is a typo. It should be 2024.
Okay, that's
Okay. that
very
helped
helpful.
me understand. That was what was confusing me.
Sorry.
That was one
Okay.
piece.
I can see why. My apologies. Yes, that's a typo. It should be December 31st, 2024.
Okay, that is what I highlighted that and I couldn't understand it. So we have some time, at least, for a year. And then CARES Act, I couldn't distinguish between this of what's CARES Act and what's considered ARPA. So is CARES Act funding already expended?
Madam Chair and Councilwoman Villarreal, yes, the CARES Act funding was fully expended in FY21. That was the 17 million that was included in our FY21 audit. There was a much shorter time period to expend CARES Act. That was the initial relief bill. And then ARPA, they call it SLFRF, the state and local fiscal recovery funds. That had a longer time frame and more broad allowable uses.
So yeah, I knew about the CARES Act. I was trying to figure out about that special funding. Does that's considered CARES, right? Not
Madam
ARPA.
Chair and Councilwoman Villarreal, SLFRF is part of ARPA.
Okay.
So the American Recovery Act included the state and local fiscal recovery fund.
All right, thanks. And then we say on the next page, on page 4 at the top, the last sentence of that paragraph, it says, in addition to these funds, the city also received the 950,185 from the National Opioids Settlement. So I'm curious about where do we hold that? And when does I guess I'm curious about a plan as to how those funds will be created.
Madam Chair and Councilwoman Villarreal, so we have started meeting on that with the city attorney's office and the the Department of, I just blanked out on the name, Kira's department.
Human Services.
Health and Safety,
Health and
There
we go.
Kira's department, Community Health and Safety. We have started meeting with them to understand allowable uses for the opioid settlement funds. Broad brush, the funds have to be used to provide aid to those who are directly affected by the opioid crisis. And Kira has some ideas that she's working on in terms of how to spend the money. The city attorney has received information from the Attorney General's office, who is the lead for the state on the opioid settlement. And it shows by party, so the opioid settlement includes a number of settlements with different pharmacies and different people that were involved in prescribing opioids over the period of time that the legislation, looked at. And so there are different settlement amounts for each of those parties and different payment arrangements, some of them are spread out over up to 18 years.
Mhm.
Some of them are going to pay the full amount in the first year. One of the things that we're trying to work with the city attorney's office and the attorneys for the AG's office is figuring out when each year starts for each party to the settlement, because it's not all the same is what we've been told. So, each of these 10 or 12 different settlements that are all part of the overall settlement will have a year 1, a year 2, a year 3. Some of them go out to year 18. But when year 1 starts, we've been told will vary by party. So maybe the date that each of those settlement agreements gets signed. So we're trying to figure out, big picture, how much money are we going to get in each fiscal year so that we can then begin to develop a plan for how that money will be expended. So, this is really good news, and, very much needed to help those affected by the opioid crisis. The amount listed there in the memo is how much was received in FY23. In answer to your question about where is it, it's currently held in restricted cash. So, it has restrictions. It can only be used for, purposes that are identified in the settlement as allowable. And as I mentioned, they are, basically direct aid to folks who are impacted by opioids. And so in order to really fully develop the plan for how the city proposes to expend these funds, we're trying to get an understanding of how much we can expect to receive in each fiscal year. And so we're working with the city attorney's office and the attorney general's office to understand how these payments are going to be distributed.
Complicated, because they're all at different time periods.
Madam Chair and Councilwoman Virial, I was hoping that year 1 would just start on January 1st for everyone. We're being told that that is not the case. It'll be probably based on when each agreement is fully executed.
Thank you for that. That was helpful. The other, just clarification, there's under lodger's tax on page 11. It was talking about some changes in state statute that addresses 2 exemptions, the 3-room rule and the exemption for non-permanent residents rentals greater than 30 days were both eliminated. Can someone expound on that a little bit more, of what those exemptions mean to us?
Madam Chair, Councilor Villarreal, I think that question would most be appropriately answered by Clarence Romero, our Treasury Officer. So I will ask him to send you an email.
Okay,
Detail.
that's great.
That
Yeah,
works?
I was just curious what that meant
Yeah.
and
we'll
how it
definitely
affects
get
us.
back to you.
Okay, sounds great.
If you could send it to the committee, I had the same question. Based on the sentence, I could take a stab at it, but I wanted to get clarity too, so it'd be great to get an answer. Thank you.
Yeah, Madam Chair, if we need to, we can also reach out to Randy Randall because he's the expert. But we will get you an answer.
Okay, that would be great. I think. Yeah, I think the only question was to learn more about Dr. White, just explaining more about the financial state of affairs. No, just when he gives us the presentation, it'll help to clarify that one last sentence in the report.
And just so you know, we do have him scheduled for December, correct? So that's part of some of the planning. I've been talking with the staff about kind of what we'll be doing here at finance in the next few months. So Dr. White will be here. And I kind of consider that the beginning of preparing for and understanding where we are for the next budget cycle. So, and we're trying to balance, not losing time with the committee we have, but not front loading too much so that the new committee members, have the benefit of the same information. So it's kind of tricky in this transition, but Dr. White is scheduled to be with us, and we'll certainly reach out to the new counselors so that they know as well, because I think it's going to be important.
That's good. That's all I have. Thank you so much.
Other questions? Counselor Rivera?
Not a question, just a comment. I think we talked about the counselors and the finance committee being more involved in how money is spent. And I would hope with the opioid settlement that Director Ochoa would include counselors in ideas about how that funding can be spent. Councilwoman Cassett Sanchez has a public health background, and she might have some great ideas about how to spend, some of that money, as well as that request is made by Director Ochoa. If you could pass that along, I'd appreciate it.
All of that has to be approved by us, doesn't it?
Madam Chair and councilors, yes. Once the plan, is developed, then the, staff would put forth items for consideration. We don't have any of this money budgeted, so we will need to do budget adjustments in order to, add it to the budget. And then I imagine there'll be some contracts associated with this.
So we'll naturally have involvement in it, but I think it's a good point. If there are counselors who have particular ideas already or see particular needs, it sounds like the time is now to perhaps reach out to Director Ochoa and add that input.
I think there's a hand screen.
We've got Counselor Cassett. All right, Counselor?
I thank you. Actually, I'm sorry. I needed to put that hand down. My questions were around the ARPA dollars, and those were already asked. And then I forgot that my hand was still up. So I'm good. Thank you.
Okay. All right, other questions? I have a couple of. So I just want to go to page 5. I think one of the reasons why this is such a great and important report, and I thank you all for putting this together, I know it's a lot of work, is that this gives us the whole picture for FY23, correct?
Madam Chair, that is correct. With the exception of CIP funds, we don't include CIP funds in this because they really have a different track. They are multi-year projects that may be spent over 5 or 10 years, so they tend to skew the information. So this is the entire operating budget.
Right. So, and I
Madam-
want to go to page 5 because that's where we see all funds, operating budget summary and projections. So we see what for FY23, what the approved budget was in terms of what we thought revenues would be at from all of our sources, what we thought we would spend from all our categories. And then we can also look at, what actually happened and what kind of variance we saw. And so this page I think is really important. And this is a page as our new software kicks in and we get our audits up to date, this is the kind of thing I want us to be looking at as a finance committee more regularly and ideally monthly. So I think, we know these are unaudited numbers, but I think it's a really good picture of what happened. in FY '23 and how close we were in terms of guessing what our revenue levels would be and what they actually turned out to be. And then, you know, how well did we do in spending the money that was budgeted? And these are the kinds of things that I think when we see this kind of report more often, we'll be able to really dial in on whether things are on track. Are we spending too much in a particular area? Are we not spending what we said we were, and why aren't we? And so I just want to draw your attention to this page 5, and it looks like, from what I can see in terms of expenditure, we were mostly under budget, except in the debt service area. Am I reading that correctly?
Madam Chair, members of the committee, that is correct, and that is a usual circumstance. Contractuals, in particular, tend to lag behind the times just for a variety of reasons that, you know, the contractor may not be able to get the necessary supplies or people in place in time. Another item that tends to lag quite a bit, you'll see, is capital purchases and land and building. Those tend to run behind, particularly in certain areas like, for example, police vehicles and fire vehicles, which are a substantial portion of the general fund capital budget. It can take a lead time of up to 3 years to get those vehicles fully equipped and in service, just because of the myriad types of equipment that have to go into them. And of course, with the lingering effects of the pandemic still causing some supply chain disruptions, particularly in the area of microchips. That's probably the most obvious sector in which we're seeing those. And of course, just a regular vehicle has quite a bit of microchips in it. When you're talking about something like a police vehicle that has mobile data terminals, more sophisticated radios, all kinds of other equipment, the need for microchips, specialized microchips, just, you know, skyrockets. So that can definitely lead to delays in those. That's why we tend to have large carry forward requests when it comes to capital and land and building, which is related to capital for, you know, ongoing projects and things of that nature that don't rise to the level of the CIP project.
And so as a practical matter, like, let's take, you know, the purchase of, say, police vehicles where maybe they are back ordered because of chip problems, other supply issues. When we pass a budget, that gives the authority for the agency to start working on purchasing those vehicles. We may not actually, as you point out, get them purchased in the fiscal year in which we budgeted for them. And then maybe you can explain briefly, then what happens? How do we move those funds? Because we do then move those funds into the current fiscal year that they'll actually be expended in if there's a delay in carrying out what was intended.
Madam Chair, the simplest term for that is one I was told by previous directors is a dirty word, or 2 dirty words. Those 2 dirty words are carry forward.
Right.
You'll see in my first quarter, I was talking to Councilor Villarreal about this earlier. In an effort to avoid those dirty words, I use the term reappropriation of unspent prior year budget, which is a bit of a mouthful, but it means essentially the same thing. Under the revised rules for bar approvals that were approved, I believe it was 4 or 5 years ago, carry forwards for grant and capital and CIP projects can be approved in any amount by the finance director in the interest of keeping things going, particularly grant projects and CIP projects. And then at the next quarter that falls, so for example, anything that was carried forward now or reappropriated from prior year budget you would be seeing on the next budget resolution for the second quarter. We just, this past city council meeting, you did approve the first quarter budget amendments, which included quite a lot of these carry forwards. And if you look that over, you'll see, probably 4/5 of the items on there are for carry forward of one sort or another. But that is how we deal with those issues. It's not just police and fire vehicles that we do, of course, it's all sorts of things, but those are just the most egregious examples, if you will, of, just buying a pickup for the Parks Department. They may well be able to do that within a year. At least now that the supply chain issues have mostly gone by the wayside. But when you're talking something like a police vehicle, a fire vehicle, or, shout out to James Harris here, an advanced rescue and firefighting vehicle or ARF vehicle, those contain very sophisticated equipment, and sourcing all of that and bringing it all together from the vendor can be a real nightmare in real time.
Right, and I only draw attention to it because I think it's an easy example to understand. And I again, my goal is to make us, to build the foundation of knowledge about how city finances work and how, these things that come to us throughout the year, how they all fit into the whole and help the operations of the city. And I want to see us do a lot more work there. So I appreciate that. I did have another question. Let's see if I can find it. Flagged it. On it. Can't find it. Okay, on page 9, I was a little confused, and this Director Latero, you might have mentioned this at the beginning. So this, at the bottom, it says, year to date, the city has received 113.8 million, or 82.6% of the total GRT budget of 137.7 million. 2 more months of GRT distributions will be received and recorded for the current fiscal year, which I assume is FY23, because that's the context we're talking about. But that's what you were saying in June. That doesn't line up with the receipts for June. That's actually the receipts for April that we get in June. Am I understanding that right?
That is correct. There's a 2-month lag in what we receive from the tech.
So really, we now know, though, and it's not reflected here, what we got for what we would have received in, I guess it would be July and August, which would be May and June, and give us really the whole picture, but that's not in this report.
Madam Chair, just to clarify, the tables on pages 5 and page 7 include everything that will be booked to FY23. So they do include those checks that were distributed in July and August, because those were booked back to FY23, even though they were received in FY24. So those 2 tables are not on a cash basis as the section 2 are, but on an accrual basis. So that is actually how the money is booked into our system. The GRT report is done on a cash basis just because it makes it a little bit easier to identify and keep up with trends in there, and discuss things like, changes in sectors and things of that nature. So it is a little bit different, but if you're looking for the whole picture for FY23, rather than just focusing on GRT alone, those tables should give you the information that you need.
Okay, so the table's on pages 5 and 7? Yeah, okay, so though, I'm glad I asked that question, that's helpful. So then, do we know what I guess it would be in the GRT report that we get from you, the separate report would give me how much was 100% of receipts for the FY '23, because we're past obviously July and August, but that's on a cash basis.
Correct. What we received for FY '23 was 154.3 million.
Right. But we budgeted 137. So that stays the same.
Yes, Madam Chair, 137.7 is what
Okay.
the new budget was for GRT.
Okay, perfect. That's very helpful. All right, any other questions? I just, again, want to,
Madam Chair, I
Yes.
just had a quick
sure.
question. I was looking on page 7 under the revenues, and it says miscellaneous revenues negative 958%. Can you explain that?
Madam Chair, Councilor Villarreal, you're kind of looking at one of the things that irritates me
Yeah.
more than anything else. I won't mention any names, but some previous staff who are no longer here decided that it would be a good idea to book reimbursements that are made to customers from all kinds of fees, whether they be water fees, wastewater fees, recreation fees, to just basically throw them all into miscellaneous revenues. The finance department has discussed going back to the way that we would do it in the past, which makes much more sense to me. I'm just a budget guy. I'm not an accountant though, so maybe there's other factors I don't take into account. But for example, an ambulance fee or refund, ambulance fees is actually one of the things that we see this the most in, where a billing is sent to an insurance company. There's kind of a back and forth. Some of that billing may have been received and then has to be returned because for one reason or another. I don't necessarily know all of those factors, but in the past, and what I think would be clearer for these purposes, those reimbursements would go as an offset to ambulance fees. But in the current way that we are booking them, they all go into miscellaneous revenues, which is why you see such a large negative number there, rather than a slightly, offset number in, ambulance fees, planning and land use fees, recreation fees, et cetera, et cetera.
What else is in that category that makes it so, or offsets it so high?
It's basically every kind of fee that the city collects. Be it permits, fees, zoning fees, water and wastewater, or in the case of general fund, I guess it wouldn't be water and wastewater, but virtually every kind of fee that the city collects in the general fund would play into that. And, there's a variety of reasons why there might have been a mistake in an overbilling, or there might have been, information that came to light later that showed that, this person needs to have a refund that was billed incorrectly. So there's just a wide variety of stuff in there.
Thank you.
Okay, and just one other little interesting thing on page 11, the lodger's tax. I was just looking at the number, the $12 million number that we were at pre-COVID FY '19, and then it's, it tanked obviously in FY '21, and now it's back up and actually a little bit higher than its pre-COVID level. And I don't know if you have anything else to say about that, but I just thought it was sort of interesting.
Madam Chair, I would just add that for beginning with FY '24, we're going to be adding the short-term rental portion of lodger's tax. So these numbers currently don't include that.
Hmm.
If you add in the short-term rental portion for FY '23, you're looking at over 19 million. So it is significant. So that is something we're going to be adding in FY '24 to show the short-term rental portion of the lodger's tax as well.
That is very, very interesting. Counselor Rivera, see, look, we got everybody at the mic.
On that point, is that about the time we also started collecting on Airbnbs and?
Madam Chair and Councilor Rivera, so the tax on short-term rentals is what I'm referring to. Yeah, so it didn't start in the current fiscal year. It's just historically, this time series data doesn't include that component. So for our reporting for FY '24, we plan to include the short-term rental portion, which would be on things like Airbnb, VRBO, things like that.
So, and you have the number for FY '23? Then if you include short-term rental, what is it?
Madam Chair and councilors, we just went over it. It was over $19 million, including the short-term rental component.
Is that in, did I miss that? Is that in here?
Madam Chair, it is not.
Okay.
This time series data looks only at the lodger's tax
Okay.
portion.
So when you say we just went over that, you mean you
Oh, I'm so sorry.
internally just
Sorry,
went
Madam
over that?
Chair.
Okay.
We discussed it with staff earlier today.
Okay.
My apologies.
Yeah, sorry, I thought I missed
No,
it.
no, I'm sorry.
In a
My
footnote or
apologies.
something, so.
Madam
Okay.
Chair, that's in the table on page 5. It's like the 4th line down. You'll see it's actually just shy of $20 million.
There you go. I see it. $19,955,527, in fact. Okay, perfect. Thanks. Thanks.
Madam Chair, on a follow-up with that,
Yes.
so the 19 million in tax revenue for short-term rentals, that includes Airbnbs, VRBO, right? Or is that separate? We were just having a side conversation trying to figure that out.
Madam Chair and Councilor Villarreal, so the 19 million includes the lodger's tax on traditional accommodation, hotels, motels, as well as the portion attributable to short-term rentals, which includes Airbnb, VRBO, that type of accommodation.
So it all falls under the lodger's tax and then is distributed based on state statute as accordingly.
Madam Chair, yes. So with regard to lodger's tax, so there's the 5%, and then there's a 2%, which is related to debt service for the convention center. And that's what makes up the total rate of 7%. And as you mentioned, the allowable uses of lodger's tax are specified in state statute. It's essentially required to be used to promote tourism and for purposes that are, related to promoting visitors.
Got it. Yeah. Okay, thank you.
Okay, thank you. Really appreciate the work. Really appreciate having this. It's important and look forward to seeing these things more frequently. And then we can, I think, if we're doing budget to actuals and we're doing them more frequently, we might be able to even see them by department, which I think would be helpful, so that we can get a better sense of how the year is progressing and how the work is progressing and, what issues are popping up, and that helps us provide better oversight. So appreciate that. Thank you all. All right, we will go to the consent agenda and believe we have item E, which was pulled, a request for approval of amendment number 3 with Bradbury Stam Construction, Inc. for the construction at Santa Fe Regional Airport to increase the term by 150 calendar days and to increase the compensation in an amount of $1,722. Let's try that again. $1,722,605.46 plus New Mexico GRT for a new total contract of, good Lord, there's a lot of commas here, $23,140,903.02 plus NMGRT. And we have James Harris and James Garduno, who is the project administrator, and of course, James Harris is our airport manager, to answer questions. I believe Counselor Lindell, you pulled this item, is that right?
Thank you. Thanks for being here. I'm sorry it took so long to get you to the microphone. Could you just give us a little bit of an overview how it seems like the engineering firm that we hired, we keep having these unknowns that pop up that I just wonder, is it reasonable that, I mean, because this is our third amendment rather, and it's adding on a substantial number of days. Why do these keep happening?
Thank you, Madam Chair, and committee. So to answer your question, so in the beginning of the project, we did a lot of cost-saving measures. We left out some things to save money elsewhere that was needed. And then throughout the project, we started finding, those hidden things around the terminal, in the parking lots. So what we were able to do was, once we found the problem, we were able to fix it. And then coming forward to this year, I was able to acquire a New Mexico State grant for $4 million to help us finish the terminal for all the things that were missed in the discovery. So now that we found all that stuff, it's time to put it all together, and here is Amendment 3. So the extended time is for all the things in the parking lot that we didn't know about. The lines were more shallow than were initially estimated. Power lines were more shallow. We had phone lines that sat about 12 inches from the top of the heel. So we had to bring that down, what was it, about 7 feet, and then another 3 feet under that, just to get it all. So everything came together, and that's what we're looking at now. It's just.
So how long have those lines been there? I mean, I don't need to tell you, there's a tremendous difference between 1 foot and 7 foot. How did they pass on a project where they were only 12 inches deep?
So these were, it's been there for a while, a long time, at least the age of the terminal, which is 1958. So they've been there for a while, and the standards have just changed. And if you remember the geography before we started digging into the parking lot, it was very hilly. It was about a 7-foot ascend up to the top of where the unpaved parking lot was. So all that had to be brought down to ground level, which meant we had to bring down all the sewer lines, the water lines, phone lines, fiber lines. I mean, all the utilities had to be brought down. And then when we found out that they were more shallow than we expected, we had to make plans, because the lines had to be changed out because they couldn't stretch that far. It was just a big undertaking once we start digging.
What's the, upon completion, in terms of the parking lot, are we gonna have some way for people to get from that parking lot to the terminal without hauling their suitcase through a field?
Yes, Counselor. Right now, we have a temporary shuttle running. That's running from, I'll let James explain it. It's under him.
Madam Chair, Councilor Lindell. Yeah, we got a shuttle service working now. We're hiring additional people We made an executive decision to not transform the front of the parking lot. We're gonna transition into a new roundabout, but with the date and the holidays coming forth, we're gonna pass it till after January. After January, we will move the roundabout, but during that time, they have finished the sidewalk that comes from the parking lot and it's fully lit and it'll go directly to the front of the terminal. So there won't be any dirt or anything. It'll be a pool.
And when will that happen?
We plan on, Madam Chair, Councilor Rendell, we plan on doing that right after the new year, but say the second week or so.
Thank you. I know it's an ongoing, and so what's our new completion date for this project?
Madam Chair, Councilor Rendell, we're looking at the end of January. The reason for is we have FAA, TSA, airlines, rental, and we have to function everything together. Just as a part of the project, moving the TSA equipment, TSA requires us to use 2 specific vendors. I have contracted 1 vendor and they have provided us plans on moving the equipment. I have tried to communicate with the second vendor and lock in a contract, and I haven't been able to complete a contract. The last meeting I had with TSA, they mentioned that this vendor is actually short-staffed and possibly backed up. So I sent the contract back to our legal team and I sent it back to them with a expiration date of the end of January, hoping that we could schedule this TSA baggage claim move. We're hoping that it actually does fall in line. We are gonna have contractors on site to the end of March. The actual terminal part should be finished by the end of January, hoping that it falls in line with our contractor getting them on site. The TSA baggage screening machine up and running and fully functional. I'm gonna be honest, there is a possibility that that doesn't happen, but the good thing is everything else in the terminal will be fully functional. So on our plans, I'm not sure if you're familiar, but Airline 1, which is gonna be the new airline spot that we're gonna be able to add, that's currently where the TSA resides, and they're moving over to the left, which is a vacant old baggage claim area. So it's very possible that even if we don't get it moved, we'll be able to open up the secure area, which is the waiting area, and that'll be fully functional. And then if we're not able to get the contractor on site, then we might have to move that machine at a later date. But we're hoping the stars line up and we don't have that.
You know, I remember we approved a pretty sizable contract to move that piece of machinery. Okay, well, good luck with it. I'll move for approval.
Motion and a second to approve this item. Are there more questions? Counselor Rivera?
Question, just a comment, but I want to thank both Jameses here for all the work they do. Being on the Airport Advisory Board, you see what happens on the public side of the airport, which is one world and one way of doing business, and then everything that happens on the other side with security and runways. There's one runway work that's being done at the same time all this other work is being done, and it's just the amount of people and bureaucracy they have to deal with is amazing to me, and they do a great job. So thank you both.
Sure, Councilor Lindell, I appreciate it. We're gonna miss you, Councilor Rivera.
Other comments, questions? Yeah, I have to say, I really appreciate your ability, Manager Harris, in finding money to do these important things that we need to do. And I know you've been instrumental in not only finding it, but securing it. So as long as we're throwing out compliments, I'll add that. Anyway, thanks for being here tonight. Can we get a roll call, please?
Certainly, Madam Chair. Councilor Cassett,
Yes.
Councilor Lindell, Councilor Rivera,
Yes.
Councilwoman Villarreal,
Yes.
Chair Romero Worth.
Yes,
Motion passes.
thank you all. All right, we have one more item. Item H was pulled from the consent. This is consideration of bill number 2023-25. This is sponsored by Counselor Jamie Cassett. A bill amending SFCC 1987, section 23-4.13 and 23-7.5 to remove youth leagues' priority use of certain city sports fields and adult leagues' priority use of the municipal recreation complex sports fields, and to require annual review and publication of a field use management plan. It looks like tonight we have Regina Wheeler, who is our Public Works Director. Counselor Lindell, I believe you pulled this item as well.
I did, thank you. Sorry that you had to stay so long, Regina. Could you give us an overview of what the purpose of this is, and how hard it's going to be to implement?
Thank you so much, Madam Chair, Counselor Lindell, for the question. Actually, this has been implemented for a long, long time. This is formalization of a process that's been going on for over a decade out at MRC. And it's really neat how it works. All the leagues that want to use the facility get together with the staff at the same time. And they all let staff know what their real desires are for the use of the fields. And then staff puts all of the things on the calendar that can possibly fit. And then the community and staff work together to make compromises and fit everything in that they need to. And it's been working really well for a long time, even with the addition of the leagues that came from the Downs last year and have moved to the MRC sports field. So it's really making the code now match the process that actually happens.
Madam Chair, can I jump in a little bit behind why I brought this bill forward? Because I think maybe that would help answer the question a bit.
Counselor Cassett.
Thank you. So the reason that we're bringing forward this bill is, we've requested money from the legislature for the MRC Soccer Valley expansion. And in speaking with some of our Santa Fe delegation, they stated that they were not interested in funding the MRC expansion if there was still this prioritization for youth sports, as they really wanted to expand access to is there's a prioritization for adult leagues as they want to expand access to youth sports and youth activities. As Regina just mentioned, there is a process of how the fields are allocated. And then there's been conversation around as we expand Soccer Valley and we light those fields, being able to actually get dual use on the same night. So kiddos going earlier in the evening and adults with the lights being able to go later. So the reason that I'm bringing this forward and really changing this is because this was a request from some of our Santa Fe delegation in order for us to get those dollars so we can build those additional 3 fields and complete the Soccer Valley master plan.
Counselor Lindell.
So I'm not really familiar with how soccer scheduling goes. I drive by the MRC almost every Saturday and a lot of Sundays. I never see the fields being used. What's up with that?
Madam Chair, Counselor Lindell, the season did end, but I don't imagine you're talking about the whole entire summer. So the season did end a couple months ago or a month and a half ago. But I can't tell you why. I would assume it's because nobody wanted to use the fields at that time because they do get to schedule them per their preferences.
It just seems like we are constantly with this issue that, we can't get a field, we don't have any place to play, and Saturdays and Sunday, they're empty. I mean, I'm not really asking a question, I'm making a comment. Thank you, Chair.
Is there a motion?
Move to approve.
Second.
A motion and a second. Is there further discussion? Can we get a roll call, please,
Madam
Director?
Chair,
Oh,
just a quick clarification.
yes.
Because I think the caption is a little misleading. Because someone asked me, well, why would you remove youth leagues prior to use? But I think Counselor Casa explained it. The language in the document and the actual plan is making it more accessible for a lot of different priority uses. I don't know if Counselor Cassett could explain or just say a little bit more about that.
Yeah, absolutely. When I was speaking with Melissa about this and the scheduling, we were talking about looking at how we can add additional flexibility to how fields are assigned. So not just looking at MRC, but as we move forward with replacing Salvador Perez, as we move forward with looking at, I know Alto has a soccer field that very much needs to be replaced. Current utilization of Swan Park right now is where actually all the youth leagues have been playing, so that they can all gather in one spot on those game days on Saturday. And so the removal of the prioritization for both MRC for adult and youth for other fields was really to allow that flexibility and that collaboration between the different leagues. And as we continue to look at some of the different investments we want to make, for example, lights really help create that dual usage. I've had some conversations as well with the school district about some of those fields that sit empty outside of school hours and how we could potentially look at partnerships there. So it is about this broader strategy of how we bring flexibility and collaboration between the leagues and all the lovely bureaucracies that control those fields.
Thank you. That was helpful. That's all I really wanted clarity on. Thanks.
Great. Any other comments, questions from the committee? And if not, can we get a roll call, please?
Certainly, Madam Chair. Counselor Cassett,
Yes.
Counselor Lindell, Counselor Rivera, Councilwoman Virial,
Yes.
Madam Chair.
Yes.
Motion passes.
Terrific. All right. We do not have any action items for discussion. There's no executive session. Matters from staff.
Madam Chair, nothing from me tonight.
Matters from the committee.
Sure, just one, again, I only have one meeting left, I think. Just the cannabis information that had been requested, and if you want to send that via email, that's fine, instead of giving a presentation here. Just wondering what that revenue looks like.
And Councilor Rivera, we did discuss that. We had put that, we're going to be doing a presentation, unfortunately, in January on our revenue sources as a lead up to our budget conversations, and we had captured it there, or planned to capture it there. So
I can watch it.
okay, so sorry about that. It just made sense with our time, and I think the last meeting for this committee could be quite lengthy because there may be a lot of contracts that have to go in before the end of the calendar year. So just again, trying to plan out how we approach everything and also include the new counselors, which is tricky. I don't want to get too far ahead of ourselves and then the new counselors don't know what's happening. So.
Fair enough. It was just a curiosity thing.
Yeah. No, and I'm interested in knowing it too, but we're going to do it as part of an overall revenue piece. Other matters from the committee? Okay, matters from the chair. Our next meeting, and I believe our last meeting of the year, am I correct, is Monday, December 4th. And with that, I really appreciate your attention tonight, and sorry about the length of the meeting, but I think we did cover some important work. So thank you, everybody. Really appreciate it. We're adjourned.